Hi, this is Ola Ibiwe of Commercial Property Club. Once again, thank you for tuning in for another episode. Here we serve investors with knowledge-based insight in commercial real estate investing. Today, I will be talking about a topic in which is more grounded in the space of medical practitioner. The topic is how physicians are using apartment investing as a tool to build wealth. Physicians need different investment to create a healthy financial portfolio and maintain financial stability. Commercial real estate and apartment properties are excellent investments for physicians. It's less volatile than stocks and offers exceed growth potential and attractive annual returns. Before passive investing in commercial real estate as a physician, you should know that multifamily real estate is very stable and exhibit low volatility, especially when you compare it with stocks. Commercial real estate offers high growth potential and attractive returns. Commercial real estate consists of properties like retail building, office building, likes of your industrial and your apartments. But still, the most robust performing commercial real estate sector is the apartment, which is also your multifamily, which is essentially just a rental property with 5 or more units. Your units could range as much as even 100 to 200 units. Some physicians invest by purchasing properties themselves or invest passively or as a limited partner by investing in multifamily real estate platforms like syndications. Now let's talk about the benefits of commercial real estate investing when it comes to physicians. A few key benefits make commercial real estate an excellent investment for physicians. Number one, high growth potential. The market for commercial real estate is growing rapidly. So the investment has the potential to grow at a much faster rate than the likes of your stocks or bond. Number two, it is less volatile than other types of investment. The multifamily asset class has proven throughout many real estate cycles, including cycles like the pandemic that we had recently, that is recession resilient. Number three, it has attractive returns. Physicians expect an annual returns of about 8% upward on their commercial real estate investment. That rate is higher than your average stock market returns. Many physicians find this very attractive. Number four, you can't lose in commercial real estate like you can with stock. Many physicians invest in commercial real estate property. If the market happens to dip, they're not going to lose money from their investment because the holding period of the deal will be much more extended than the dip in value. Another one to consider is the tax benefit. Commercial real estate offers a few tax benefits you don't get with other investments. The depreciation deduction, through straight line depreciation or a cost segregation study to accelerate depreciation paper loss, can be used to offset any income you make from your investment property. Another one to consider is that the asset is tangible. Unlike stocks and bond, real estate is a very tangible asset. You can see it and feel it, which can make you better connected to the financial decisions you have made as a physician. How do physicians build wealth with apartment investing? Let's consider number one, the buying of apartment building by themselves as a real estate investor. You can research and begin investing by purchasing an apartment building as a solo investor. While this may be the most intimidating decision, the good news is that you can keep all the profit to yourself. What you should know about buying an apartment building on your own is that the most important things to remember when investing on your own is that all of the responsibility falls on you. You'll be on the hook for maintenance, work, for tenant conflict, collecting of payments and other tasks, it is helpful to have or hire people in the space of your legals or financials or your maintenance are concerned. Number 2, teaming up with partners to invest in apartment building as a physician. The next option is to find a partner for the investment so that you can manage the risk together. If you have a partner, it speeds up or divide many responsibility in between each other. The benefits of this would be you can team up with someone with experience or skills you don't already possess. You can raise more capital and split the expense. You can divide the work. Some other ways is investing in real estate syndication agreement as a physician investor. A syndication agreement is when you pool money with a small group of investors to purchase real estate. This type of investment may be an available option for those who don't have enough money to make such a hefty investment on their own. There are many online platforms that have simplified this process now. Real estate syndication is much simpler nowadays. An attractive form of passive income comes through platforms like that. A syndication agreement works when the person in charge, called the syndicator, opens their property investment opportunity to multiple investors. The syndicator does all the decision making while the investors, also known as the limited partners, receive passive income from the property. Another way in which physicians build wealth in apartment investing is they invest in apartment through real estate crowdfunding. Real estate crowdfunding projects are one of the newest way actually to invest in apartment building without doing any much work. And this is just simply a general public to contribute capital through a platform or general soliciting to a real estate project, a registered platform. There are some few things that make crowdfunding different from real estate syndication. Real estate syndication is a funding relationship between a smaller group or accredited investors or sophisticated investors, while crowdfunding is a method for finding investors of all experience. While the terms are closely related, they're actually not exactly the same thing. A drawback with crowdfunding is that these investments are typically liquid, meaning you likely won't get your money back for a few years. It's extended. You may also have to pay some fee when using a crowdfunding platform. There's some benefits that come actually with crowdfunding. It requires a low startup capital compared to trying to purchase an entire building by yourself. The risk is actually split between multiple people because there are several people that will be on that platform also investing. You may also not worry about qualifying in any capacity for the mortgage on that particular property. Other ways in which physicians can build wealth in apartment investing is also by investing through REIT. While investing in apartment building can be a healthy option for diversifying your portfolio and a decent edge against inflation, it comes with extensive work that you may not have time for. If you're not sure that you're ready for the responsibility of investing in an apartment building as a property owner, you can always invest in a REIT. That's a real estate investment trust. REITs are companies that are own, operate, or provide financing for income-generating real estate projects. REITs are the most passive way to invest in apartment buildings. REITs have made real estate investing more straightforward and accessible to investors with varying budgets. There are also passive investments that don't require any effort on you, but how? Meaning you won't have to worry about screening tenants or collecting rents or what have you out there. Well, in conclusion, I would say real estate investment is a particularly attractive portfolio or builder for medical professionals, physician in this particular case, because investors can dedicate as much time as they desire and explore investment alone or with partners. It is also a passive income stream that will be there whether you work it or not. So if you're a physician investor of apartment, thumbs up on you. You're already in the game. If you're looking to get in, well, you are now informed by Commercial Property Club. Thank you for joining me once again. This is Ola Ibiwoye.